Hello everyone, it is Jenny, and today I want to talk to you about as a first-time home buyer, there is a lot of people start to looking to buy their first home and they don't know where to start and what the lender is looking for. I see a lot of misinformation online and I want to do the live test on your application so you know what I'm working on. And how do you get started? I don't know where you at, but you can do this is exact the same way how when I started to bought this house in 2021, and this is what I do. But I am in the business, so easy for me to do this because I know what will be my debt to income ratio, how much I qualify because I'm in the business. But a lot of people, they don't know anything about this, so I want to show you what as a lender looking for when a buyer want to look into a pre-approval. And I want to show you on the system as a lender, and you will know like a little bit idea that how to calculate your income, how can you qualify. When I do a pre-approval, sometimes I don't need to run credit. I'm very good at calculating income without running the client credit. And I will always depend on my client to tell me the truth about the credit. But sometimes I say, hey, my credit is very low, I don't know what's going on, we will need to run a soft pull. Let's say you live in Kingwood. I live around in this area, but I really love Kingwood because I love nature. Kingwood have a lot of beautiful homes with lower price. Tax here is very low. If you live in Houston, Texas, the whole Houston is very big, okay? You can drive from here to here, is almost like an hour, 30 minutes away. And every single city, they have different tax rate. And if in an older neighborhood, like in Kingwood area, it's like my area, only 1.66% for property tax. But somewhere in Katy or a new development areas, your tax may be 3.5, 3.6%. So you need to pay attention to those because that will be your payment every single month and keep increasing. If you file homestead, you get $100,000 discount on your value, so pay less. But as an investor, you need to look into so many factor that's to see if you can make profit if you buy anything. Everybody have different taste, okay? I love high ceiling. I always looking for high ceiling. So when I look on the picture, I was like, I like this and I don't like some very low ceiling ones. So very easy for me to narrow down what I like. You need to know what you like first. What will be your style? Do you like an older house? And then you can fix because I'm very handy. But some people, they just want to buy something and don't have to be worried about it. So you're going to pick a new build, okay? Buying a home is very complicated, but it's very simple if you know what you're looking for. At first, you need to know what you like first. What type of home? How many square feet do I need? And let's pick something that we can work on today. Let me this one 200. All right, so that's nice. Okay, high ceiling is good. Let's pick this one in Humble. I really like Humble area because it say Humble, but actually attached the city actually attached the city. Tax rate is very low. Okay, so now when you see a listing, you see the price, you see the year bill is 1977, only $29 a month. This community maybe don't have much tax anymore. The longer it is, it doesn't have much tax. My house, I pay $700 a year for mud tax, but this I don't think it still have mud tax because it was built in 77. And remember, close to the airport. Insurance is very expensive. Sometimes they don't even issue the new policy when you live too close to the airport. You need to pay attention to the price. And then property tax. When you see property tax only like 2,000 something, it's based on, I'm sure this seller have been living here for a very long time. That's why that property tax is low. But based in the tax rate in this area, you're going to pay around 5,000 a year for this. But that's what, like, just use this and 292. And then if this is your primary home, your property tax may be around 5,000-6,000. Let's say 2%, it will be 6,000. Now I go back to an application. So you're going to submit your application to a lender. You're going to fill out your, I don't like this one. Okay, so this will be your information, like your first name, your last name, your social security number, your date of birth. Are you US citizen? Are you married, unmarried, or separate? This is what we need to ask, and you need to fill it out on your application. When it say married, when you say married, because Texas is community state, your spouse needs to be on title. So if you put married, you don't have to disclose anything. But if you are married, you need to add your spouse to the title of the property that you're going to buy. And the spouse doesn't need to be on the application. So this is how we do. Okay, so borrower A have perfect credit score with good income, and the spouse, the credit is bad and doesn't have income. Why do you need to add the spouse to the mortgage to make it look bad? Because their income doesn't need for this application. So add someone to have more benefit to your application, because lender looking into what will be your credit, what will be your debt to income ratio, how much you're going to put on down payment. That is very 3 items. It go together. So this is what we go into. This is my phone number. I use my email address. This and then how long have you been living in that address? Lender only need 2 years. History, if you rent each year different address, you need to disclose in here, because you cannot just say something on your credit report. It show everything. And then, was you in military? Say none. Have you ever have ownership? I don't think they even ask this, but we need to fill it out. What language do you speak? But usually I fill this out for you. And then these are the questions you need to answer, like will you occupy this property as your primary residence? Yes. Have you have another property in the past? Say no. And then you need to answer all of these questions. You cannot lie to the lender. Like, have you ever, you need to write all of this down, otherwise it's going to be fraud. Like, have you ever have foreclosure or bankruptcy? You need to disclose everything. If it's yes, we'll find solution for you. FHA, conventional, it requires different things. And this is all the answer that you need to reply. And then to your financial, okay, you need to disclose how long have you been working in your company. Are you self-employed? Self-employed calculate income very different. If you're working for a company, that's easy, simple. You don't need to work there for 2 years, but you need 2 years history. When you are working in let's say you're from California, you move to Texas, you get a job offer letter. Today is January. Let's say the job offer letter, you need to start to work in March. You even can use that job letter, offer letter to apply for your mortgage. You don't have to work in that company yet, but you need to start that job 90 days, between the 90 days after you sign your paperwork, and you still can use that document, you still use that income to qualify for your mortgage. So this is all the question that the lender need for your income, of course, and we will verify. We not just take whatever that you say. We verify by calling your employee for them to fill out the paperwork or on your credit report. Whatever way it is, we're going to verify, so cannot lie with the lender. And then asset. The asset is very, this part we not need to talk about, because with asset, a lot of people, they have 10 different banks. And every bank they have like 1,000, 2,000. And when you want to buy something, you need to show the lender you have enough money for cash to close plus closing costs. So in 2 months before you want to do anything, push all your money together in one bank account, maybe in a saving account where you don't have to move in and out of the fund. Like if you need $22,000 for cash to close, put everything into a saving account and put in there like $23,000. And don't touch it for 2 months, because when lender don't see it, they don't question you, okay? All you need is just put in one bank account. Some lender, your spouse not even check your bank account, but the underwriter, they use the thing to say like, what are you use here? Why you transfer for this one $1,000 a month? They ask all the question. So if you don't want headache, about someone asking you too many questions, don't do it, and don't show the lender that's too many problems for them to ask. If you have any property that you own, a lot of people say, oh, lender not going to know anything, but as soon as we run the title search, everything will show up. Even though your dad, your parent add you to the title, it's going to show up as ownership, so don't lie to lender. And then we go into the loan and property. Okay. Oh my God, if I'm talking about mortgage, I can talk all days. So 200, the purchase price would be $292,000. And the down payment and the loan program is totally different. I will talk next time, but today the purpose is what lender is really looking for. Let's say your income is $7,500 a month, gross income if W2, okay? And then you have 3% for down payment. Okay. See, when it's wrong, the lender knows it's wrong, because you cannot do 3% with FHA conventional loan. I will explain about that later, but let's say you have only 3%. Let's say you have only $10,000 in your bank. Can you buy this home? Yes, you can. Let me show you how. So, oh, I'm sorry. I need to take this out. Okay, as of right now, I can see like how much you need to buy that property, but just now I delete the seller credit. In today, January 28, 2025, when the rate is high, you can ask a lot from seller for seller to cover your closing costs. It's around 3%. I will do another video later, but as of right now, I'm going to show you, okay? So I will type in the purchase price, how much you put on down payment, first time home buyer, and then property tax for 450. Okay, so in this area, homeowner insurance right here, you need to shop for homeowner insurance. We will pay through your closing costs. So you're going to pay a whole year for your homeowner insurance first, just like when you buy a car. You need to pay 6 months upfront for them to insure for you. But in this area, maybe 3,000 a year, especially with this home was built in 1977. So, but I want to push all of this number the highest that I can, because I don't want to get into, let's say, hold on, save change first. Okay, so as of right now, I haven't said the PMI. Let me. Okay, mortgage insurance. When you don't have 20% for down payment, the mortgage insurance is depend on your credit and DTI. It will going to change. If I put this only like $100 and here's like 200, the DTI is go lower. Your mortgage insurance will be low. If you have 800 credit score, the mortgage insurance is like pretty manually, maybe $20-$30 a month, because the debt to income ratio is low, your credit is high. This one is you. And if your FICO score is 685, and then the DTI, I want to change this later, but this one is maybe going to 250. It will be depend on your FICO score and your debt to income ratio. So the payment right now is your total payment is $2,365 total. That is how the lender calculates first mortgage payment, your principal and interest, your homeowner insurance, your property tax. A lot of time that I see like Rocket Mortgage in Houston, and they put $50 right here, and then they tell you your mortgage payment is $2,300 a month, right? And that is the total that you can afford, and that is what you like. Okay, I buy this house. This is how much I want to spend. I only want to spend $2,400 a month maximum, because that's my limit, because you still have like grocery and all other things else. And then if someone they try to manipulate the application, they will put homeowner insurance lower, property tax lower, so you can go with them. Because when I send out right now, my cash to close only $18,000 right now. Let's say the lender A tell you, when they manipulate with the number, and you say, oh, I only need $18,000 to buy this home. That's perfect, but you don't see the inside, because a lot of people, they manipulate this number to see the closing cost and everything is lower, and it's not benefit for the borrower at all. Because what if in your bank only have $19,000 total, and then at closing, when the insurance come back with the real number, and then the property tax is $500 now, your mortgage payment is $2,800. It's $500 over your budget, and now you stuck because you already paid for the title company $3,000 for the earnest money. If you back out, you lose that $3,000, and now the cash to close total is 21. The correct number at the end will be this number, and where do you have another $3,000-$4,000 to pay for it? So sometimes when you see the closing cost, when you pay attention too much on here, and you compare like why one 18,000 and 122 or one is 21,000, I better go with the 18 because they're cheaper. But actually it's not, because every single loan officer, they can manipulate the number in here, and only the good one, they will put this is to the maximum. Because what if the homeowner insurance come back low? What if at the end the real number come back is lower? Now your mortgage is $100 lower, but you don't have to be worried about you lose that $3,000 because you don't have the money to pay for it, and then the cash to close will be lower. I better give you the maximum number that you can qualify, and this makes sense to me because I don't want anybody to lose their money. It's $3,000. It's a lot of money for like 1% for that house. And then you need to pay for the appraisal, $650 for the inspection. You spend total almost $4,000 or $5,000, and then boom, now you don't qualify anymore. And when you expect $2,300 and now $2,700, it's over budget. So when you buy a home, this is very important. Not every time the closing cost look lower will be better. So pay attention to this. So now you understand how the lender calculate this, right? When you buy a home, the last thing you need to be worried is your interest rate. Everybody can manipulate. If I see my client have only $20,000 in the bank, when they talk to me before they talk to a realtor, if they have only $20,000 only, I am going to work with a realtor that is going to ask for your seller credit. If you want to sell it, they're going to do it, and all about negotiate. What if with a good loan officer, we're going to find a solution for you. When we see this, you like that house and you don't have enough money, we'll work on it. We're going to help you to negotiate with the seller. So now all you need to bring is $12,000 cash to close, because you know that there is someone who cares and will work for your benefit. So every single loan that I have seller credit, because we work closely with realtor. I was like, if I send this to some of my realtor, I say, hey, we need $8,000 more to help this, or we'll find a way to give you some money for you to make it happen, because you have only $20,000 in your bank account. You don't have enough money to buy that home. There is so many solutions that we can find for you. And you see, now you only need like $12,500 to be able to buy that home, right? So find a good loan officer and a realtor that willing to do this for you. It's hard to find a lender willing to do that, because everybody just try to get as much a client that they can. And even though the market rate is like 7%, and they will put it here, hey, I can give you 6%. And they send out pre-approval 6%. But how much is it cost for that 6%? And when the client have only $20,000, you're not going to get 6% later. Hard to find someone that's willing to tell you the truth about rate and help you to work on the cash to close. Did I talk too much? Let's see, how long is it? 28. Oh, I want to keep everything like in 10 minutes, but I talk too much. Huh? Okay, so that is what you need to pay attention at the as a buyer, and that is the trick for you to not get fooled by a lender. I am going to make another videos next time, but this is too long already. Thank you so much for watching. Thanks for stick with me for almost 30 minutes. And if you need anything, call me, or maybe follow me on Facebook or Instagram, and I will hope to help you. And if you have any question, don't hesitate to call me. Thank you. Have a good day. Bye.